Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. We are back with another episode of the Real Estate Investing Club. I hope you guys are having a great day. It's a good day for a second reason because we have Josh Chapman with us on the show today, and he is all about small town USA. I've said it a million times. There are great deals in the small towns that you wouldn't expect to invest in, and Josh knows this in spades. It's what his specialty is. He invests in small towns across America. So, Josh, I'm excited to jump into this. Thanks for hopping on the show.
Yeah, thanks, Gabe. I appreciate you having me. Looking forward to chatting with you today.
Right on. I told you before we got on here, we always like starting with stories and hearing kind of how people got to where they are. I'm sure you got a good story. So why don't you take us to the beginning of your real estate career and tell us how'd you get here?
Yeah, I will back up. I would say it's probably been about 8 years ago. My wife was pregnant with our first child, and I was an engineer at the time, civil engineer by education, and did that for 10 years. I'd say around the 6-7 year mark, we were having our first child and was brainstorming for ways to start a side hustle. And so I landed upon Amazon FBA, private labeled things for a couple years, tried that.
I did that same thing.
Yeah. I read that bio. So I did that for a couple years. Moved on to managing short-term rentals or doing rental arbitrage, where I would rent a property and then remarket it as an Airbnb. Did that for a few months and saw the potential of making good money through short-term rentals. And so that led to me, instead of renting short-term rental or renting properties to market as short-term rentals, I had the thought of, hey, I probably could go out and try to buy a couple properties and keep them as short-term rentals. So long story short, that led down a rabbit hole of reading a ton of books and Bigger Pockets and other podcasts, and just consuming for a few months, and then decided to go. I still have short-term rentals, but I decided to go the traditional rental route. So I'm a buy and hold investor. When I got started, I give the background because I knew pretty early on, when I started trying to find a side hustle, I wanted to find a side hustle that could eventually be my full-time gig. And I didn't want to be an engineer for the rest of my life. So I say all that to say, once I decided I want to pursue real estate investing, I went all in. And but I knew I didn't have the capital to be able to scale like I needed to quickly replace my income as an engineer. So I did what a lot of people do. I started out wholesaling. So while I was still an engineer, I wholesaled for about a year. Did as a part-time wholesaler, assigned about 11 deals and made roughly $100K doing that. And once the spring rolled around, my accountant told me, you made $100,000 wholesaling, but $40,000 of that's going to go to the IRS. So
Thanks,
I quickly pivoted and went more into a buy and hold mindset. Again, I still didn't have the capital at my fingertips to scale like I wanted to. So that led to really pursuing private money lenders, partnerships, things like that. So long story short, I really started, buying and holding in January of 21. And as of today, own and self-manage about 300 units.
Self-managed 300 units. That is a feat right there. We'll have to get into that in a second.
Sure.
So it sounds like a really interesting trajectory that you had. Started with rental arbitrage, got into wholesaling, buy and holds, and now you're partnering with people and have 300 doors. That is a lot to manage. I'll tell you that much.
Yep.
So you only did wholesaling for a year. What was the reason that do you still wholesale, or what was the reason you stopped doing that?
Yeah, again, once I had that conversation with my accountant, I saw that, wholesaling was great. It allowed me to cash a check, but it wasn't really building long-term wealth like
Mm,
buy and hold was. I still hold that tool in my tool belt. So if I ever come across a deal that doesn't really fit what I'm looking for, which I'm not very, my buy box is pretty broad. But occasionally, one or two deals a year, I might pass on and assign to somebody else. But that's not really when I underwrite a deal, I'm underwriting it with the intent to buy.
yeah, that makes sense. So I mean, there's a lot of directions that we could go into this. I really want to talk about investing in small towns. Before we
Yeah.
do that, I mean, 300 doors, single family, managing yourself. That is, you're essentially you have your own property management company.
Well,
So
that's funny. I do have my own property management company. We bought a property management company in a neighboring town about a year and a half ago because we already have the systems, the processes, the staff. We were a property management company managing my portfolio, so we might as well further monetize what we already have in place and manage for other folks. So yes, we do have a property management company as well.
yeah, no, that makes complete sense. And it is the reason that a lot of people that come on this podcast, myself included, we always, when people come to me and they ask like, how do I get started? I always tell them not to start with single family because the management is so it brings you white hairs earlier than you would like to have white hairs.
Or no
But
hair.
you're doing it pretty. There you go. You're doing it pretty successfully. 300 doors. What is the key to managing such a large portfolio of individual doors?
Uh, I know one of the questions you ask at the end is about, books. I'm not going to spoil that answer, but I think time management, being very organized and training, my staff, to be very organized, property management, self-managing, a portfolio. It's not easy, which is why a lot of people, hire property managers, but it is a series of tasks. It's very repeatable.
Yeah.
There are certain nuances, yeah, but it is if you have very tight processes and procedures, and you have some guidelines in place, then it's scalable. It is scalable. But yeah, it is not stress free. I will put it that way.
Is
I've grown it and been doing it for a little while, so I kind of stepped away from the day to day. But early on, man, there were some long days, some stressful days, and now I have a great team that helps me out.
is there kind of a I guess a golden ratio of property manager to doors that you found fits best?
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Yeah, so I've had some training. I'm a huge believer in surrounding yourself with very successful people and learning from them. So when I decided to get into third party property management, I surrounded myself with some coaches, and so I'm just going to repeat what they tell me.
Yeah.
I think if you have a property management company and you are 100 doors or less, you're a one-man show and
Mm,
it's difficult.
yeah.
I think the sweet spot based on what I've experienced and what I've heard is that 200 to 500 mark.
Mm,
You are able to have a small team. You're able to have somewhat of a pulse on what's going on and control quality. But you're big enough and you can justify, having a small team and not really be stuck as much in the day to day. And that's kind of what I'm experiencing now. We manage my portfolio and then manage probably about the same third party, about 250 to 300 units right now for others. So we're around the 600 mark, but about 300 third party.
okay. Yeah, that makes sense. So it's about a 100 doors to 1 PM ratio that you guys are kind of running at there.
That's correct. Yep.
Okay. Yeah. That makes sense. Um, cool. So let's talk about small towns. It's something,
Sure.
it is counterintuitive or not counterintuitive. It goes against the grain of common wisdom. Investing in smaller towns. Everybody says, invest in towns that are $100,000 or 100,000 people or more. Don't go to anything small. Always get downtown New York or downtown Dallas. But you're doing the opposite. You're investing in the small town USA. I think there's a lot of great deals in small towns as well. Why do you focus only on small towns?
Yeah. So I kind of fell into it, honestly. I'm originally from Greenville, South Carolina. And
Greenville's not, I wouldn't consider that to be that. I mean,
no, no,
small.
no, no. Metro area there, you're roughly a million.
Yeah.
And my wife is from Dothan, Alabama. So we moved to Dothan in 2015 and population around 60,000. And again, I was an engineer at the time, had no background, no knowledge whatsoever at investing in real estate. So once I got the interest to invest in real estate, it just made sense to start and cut my teeth locally.
Yeah.
So that way, if there was an issue at a property, like I knew the market well because I lived in it. So I just kind of luckily fell onto a gold mine. 60,000 people. It is the biggest city within probably an hour in any direction. The population 60,000, but the day to day population due to people traveling in is 100,000 or so. But anyway, I just found in my marketing efforts, again, I started out wholesaling. So I got really good at finding deals in the local market. I tried marketing in Birmingham, in Huntsville, in Greenville, South Carolina, in Tallahassee, in Montgomery, these other markets either that I was familiar with or were within a few hours of. And there was just so much competition. There were
Mm,
tons of wholesalers that were sending out postcards and bombarding people with text messages. And I didn't have that. I didn't have any competition locally. Sure, there are people who are marketing, but not to the degree that they are in bigger cities. So I wasn't having many conversations with prospective sellers that were saying, hey, yeah, I got your postcard, but I also got 4 other postcards and have talked to 4 other investors, and here's what they offered me. Can you do better than that?
hmm
And so I was having those conversations in bigger markets, but in smaller markets, that wasn't a conversation. So I was able to just underwrite things based on what the numbers were telling me, make my offer with confidence, and walk away with a good deal.
Yeah.
So that's why I think there's other factors too. Typically in small town USA, your property costs are lower, so the barrier to entry in terms of finances are lower. That's not always the case, but sometimes the case. It's a lot more based on your reputation. So your
Mm,
reputation matters more in a small town. You can't in a metro area of 2 million people. If you have a questionable reputation on one side of town, you can hop over to the next side of town, and nobody knows you. So in a small town, it's important to do business the right way, to keep your name clean. So I live. I try to try to do what's right. And so that helps me in a small town. So just a few reasons. The big one is competition, though.
Yeah, that makes a lot of sense. So do you underwrite? I'm assuming it's just your normal 70% minus repairs for your underwriting in small towns.
Well, I'm a buy and hold guy, so
Mm.
it's my full-time gig. So I'm all about cash flow.
Mm.
If I were to analyze something for a flip or for a wholesale deal, then yeah, I would kind of lean back on that 70% minus repairs, minus an assignment fee if I wanted to wholesale. But like we talked earlier, I analyze everything on more of a buy and hold. I have found that the ratio, this is another big thing. A lot of times, because in small towns, the purchase price is less. A lot of time that ratio between acquisition cost, purchase price, and rental price is conducive to a rental. So like in my market here locally, I mean, the property costs are very low, but the rental cost relative to the purchase price is high.
Mm.
So very, very conducive to buy and hold.
Yeah, makes sense. Is it what do you look for a certain like number of, dollar amount per door or cash flow, cash on cash? What is your metric that you use to analyze a property?
I would say both. I started out really going hard on buy and hold in 2021.
Mm-hmm.
So it's a 3.5, 4% interest rate environment.
Yeah,
is a lot
everything
easier.
makes sense.
Yeah. I mean, everything fit my numbers. Back then, I was looking at a cash on cash return of 15, 20%, or cash flow in $200 per door.
200 a door. Okay.
Today, I'm looking to break even with the hopes of interest rates going down or property values going up, and then recouping. And I say all that. Let me back up a little bit. Any single family house I buy, I don't use my own capital. I'm using
Mm.
private. So if I can get into a deal without any of my own money, and I'm breaking even at 8% interest when I go to the bank and refi, then it's going to cash flow if and when interest rates dip back to 6 or 5, or luckily, hopefully the fours.
Yeah.
Um, so so
That's a risky strategy there. Is buying, to basically break even and hope that the future changes. I always recommend buy with cash flow. Obviously, you're not going to be doing a lot of deals. But it does, you never know where interest rates are going to go. In what was it, the 90s or the 80s, they had like 14, 15% interest.
yeah.
So it's a interesting strategy.
Yeah. So let me preface that though. I can do that because my portfolio is a decent size. So if
Mm-hmm.
I was just starting out today, then yes, I would not encourage buying at cash flow neutral.
Mm-hmm.
Uh, but you gotta remember, I bought roughly 200 units before interest rates took off. So
Right.
I'm cash flowing well on 200 units. So I have the ability to be a little more loose right now, with the intent of refinancing on some of these deals. My acquisitions, I'd be lying to you. My acquisition has slowed down quite a bit over the last year, as a year and a half, 2 years, as a lot of people have
Mm-hmm.
because of interest rates.
Yeah.
So yeah, there is a caveat there. Again, I reiterate, like you said, if you're just starting out, don't, make sure it cash flows.
Yeah. Yeah. It's, real estate, you're in here to make value for everyone, but it's definitely not a charity. And so you do need to be making money. That's for sure.
Yep.
So that leads me to my next question about your minimum requirements. When you say small town, that brings a lot of different ideas into people's head. You can have a small town, 40,000. That is a small town, but you could also have towns that have 2,000. So what is your minimum requirements when you're talking about small town USA? What are you looking for at the lower threshold?
Yeah, I would say That's hard to answer because I own property in towns that have a population of 5,000.
Mm,
I think the sweet spot is around 10,000.
okay.
Um, but even if you live in a market that only has 2,000 people, there's likely a couple deals in the area. So don't let that discourage you too much. If you want to scale at all, I feel like you need to focus on markets that are a little bit bigger. It's simple supply. Like there's just less houses.
Yeah.
So I would say that 10,000 mark is kind of my sweet spot
Yeah.
as far as on the low end.
And the other problem about investing in small towns that aren't within driving distance to somewhere that's relatively large. I mean, I'm talking like 30 minutes from somewhere that's, 40, 50,000, is it's really difficult to find help, to find, your property managers,
Yep.
especially for, we do self-storage and mobile home RV parks. And if we're investing in a small town that is not driving distance to anywhere, it's hard to get somebody to go out there. You're going to have to pay a premium, especially when you got to repair doors and stuff like that. In self-storage, it's doors, but
Yep.
in single family, repair toilets, repair windows. It's hard to find the help, and so that's one other thing that you do need to consider. It's not it's not a line in the sand. You can definitely buy small in 2000, a population in 2000. There are houses there, you can buy them. I'm sure there's good deals out there, but you got to watch out for. Think about your team that you're building, and will your team be able to access the location that you are buying the property in?
Yep. No, it makes perfect sense. I'm of the mindset. I try to encourage folks that I talk to self-manage at least the first few units. Again, you got to think, every expense that you have on a property could be the difference between it cash flowing and making sense versus not making sense. So if you are willing to self manage, then more deals will pencil out. More deals will make sense from a cash flow perspective, and that's why I started self managing. I'm an engineer. I like systems. I like organization. I like processes, and I like to kind of have my hands on things and have a little bit of control. So it just made sense for me to start out self-managing, and I just have grabbed onto the reins and been pulled probably too far.
No, I love it. Right on, man. Well, hey, that wraps up the first section. It is time to jump into the quick question round. Are you ready?
Yeah.
All right.
Yeah, man.
It starts with education. Could be any form. Could be books, movies, YouTube shows, whatever. Just give me two recommendations: one for general life wisdom, and then one for real estate.
Okay. Is this your question about books or just anything?
Yeah. Books. Just give me recommendations for one for general life wisdom, and then one for real estate.
Sure. So like I mentioned before, uh, there's a million things going on in my life, and so I really gravitate towards self-help books, and I love to read. I didn't when I was in school, but it's funny, like once you get out of formal education and you get into business ownership and entrepreneurship, like you have to consume books. So anyway, time management is a huge, huge, huge piece for me. So I have two books that I recommend. Both are fantastic. One is Redeeming Your Time. It's a faith-based book, but it's also heavy on time management. It's by Jordan Rayner. A great book. A lot of actionable tips in there that you can implement. And then another is Buy Back Your Time by Dan Martell. Fantastic book. It just talks about as you grow, as you scale a business, and you do look to hire on people. I love he gives a formula in there to where you can calculate your hourly wage and when it makes sense to hire someone to take on tasks that you're doing. So, Buy Back Your Time, great book. In terms of real estate, I don't really read a ton of real estate related books now. I consumed all of them a couple years ago, but one of the ones that was very advanced or very good for me when I first got started was Gary Keller's Millionaire Real Estate Investor. So great book. It's really thick, but has a lot of graphs and charts and things. But that helped me out a lot starting out.
Nice. I love it. All right, next question is for your younger self. So let's go back to the Josh who was still an engineer, still working his desk job. Go to him, look him in the eye, give him one piece of advice moving forward.
Yeah, I think you can't have limiting beliefs. I hear excuses all the time from folks why they can't be a successful real estate investor or why they're nervous about getting started. A big one is I don't have any money. And like I said, when I got started, I had a little bit of money. I probably could have bought one or two deals, but I wanted to scale quicker. If you don't have any money and you have some time and you're willing to put in the hard work, you can do it. You can do it. I would say the kind of to piggyback on that, the number one skill you have to get good at if you want to be a successful real estate investor is finding good deals. If you can find good deals, I promise the money's out there. If you're willing to get out there and expose yourself and network, finding good deals, that's the most important.
Nice. I'm going to fast forward us a little bit since you just said that and take us to this is technically the fourth question, but we're going to make it the third question. It all starts with finding the deal. And there's many ways to do that. But you do have to get in contact with the seller and pen that purchase agreement. So what is your favorite way to generate leads and find new deals?
Just good old fashioned postcards. For me, I've tried other things with success. But I usually talk to and work with the new real estate investor that's wanting to get started. To me, the easiest thing to do is to send out postcards. That's probably been where the majority of my deals have come from. Driving for dollars. That's a widely used strategy. Driving for dollars, adding properties to a list, and sending postcards. That's my favorite way.
Yep, postcards are tried and true. They still work for any asset. You can do it. We use it for self-storage and mobile home parks. A lot of times people don't do postcards because takes money, but you do get a return on them. And the cool thing about it is they continue to work for you. Sometimes we'll send a mailer out, and then a couple months later, somebody will call on that mailer. So you never know when it will actually hit. All right. Next question is about the U.S. It is a big place. There's tons of opportunity out there. Give me the single, I'm going to say small town that you're most excited about investing in today.
I still love the town I live in. Dothan, Alabama is a great place. I know you have a big audience, so everybody stay away from Dothan. Don't everybody come up here to Dothan. But no, I mean, I usually try to keep all my properties within about an hour and a half, about 100 miles from Dothan. There are tons of little small towns in that radius. I really haven't. I've tried to invest outside of that, like I said, in larger markets with little to no success. So I always come back home. It served me well, until my deal flow slows down, I'm going to focus on the area within an hour of here.
Yeah, then that's the thing is you really don't have to go outside of 100 miles. That's a perfect radius from where you are. And some areas that's not going to work. If you're in LA, 100 miles outside of LA, it's still pretty freaking expensive.
Yeah.
But 100 miles, that is great. In fact, I just had Gino and Barbara on the podcast, and I don't know, I think they have 1,700 doors, and they only invest in Knoxville, Tennessee. One metro. Yeah. It's a big metro, but you don't have to go to all over the U.S. to find good deals.
Yep.
All right, next question is about lessons learned. Not every deal that we get into goes the way we expect it. In fact, a lot of times a wrench is thrown into the mix and we get to learn a lesson. So what was a deal that went a little bit sideways for you? And then what was the lesson you pulled from it?
Like I mentioned earlier, I kind of settled in on buy and hold. I still do, still use some other strategies occasionally. I am not a big flipper. I've had some success on flipping some property, but that has been where my biggest regrets have come, especially those big projects. When you start, when you're taking on a huge renovation. Make sure you are very conservative with your numbers, because when you start ripping stuff out, you're going to find other things. I have been bit a couple times in flips. Those huge big projects that were flips, just blowing my original budget out of the water due to unforeseen things. So I would just say the deals for one in particular, it's in Enterprise, Alabama, about 45 minutes away. Downtown area, great house, big house. It's probably 4,000 square feet, 5-bedroom, 4-bath. I got it from another wholesaler. Good deal. It penciled out great. But of course, I thought we were going to be able to go in and put in about 100,000 into it. And it ended up costing about 180,000. So, in an area where properties are very low, property values are very low, 80,000 is a big hit. I tend to stay away from flips. If the numbers pencil out where it's going to be a really good flip, that's usually when I will try to assign it to somebody else.
Yeah. I learned that lesson myself too. I did flips, a couple flips, from 2014 to 2019, and I learned some good lessons. I learned that I'm not a good contractor. I started doing the work myself, and I'm like, this is not the way to do it, man. Yep. But yeah, and good point about adding in a little cushion in your underwriting. Be conservative on your underwriting, and then add additional. I would say 20% is what I used to do. Even more sometimes, but yeah, flips are there's some guys that are just crushing it, doing like 20 flips a month at the same time, and I'm just like,
that's right.
That's you definitely have to have the systems.
My rule of thumb, and I teach other people this, is if the repair cost, if you underwrite the repair cost and it is greater than the amount of profit you expect to get, I won't touch it.
Yeah, so that is a good rule of thumb.
So if my repair estimate is 80,000 and I only anticipate on netting 40,000, I won't do it. So
yeah, that makes a lot of sense, and it's a good
rule.
Yeah, good rule to live by for sure.
Yep.
All right, that leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. What is the best way for them to reach out, and then what can they expect when they reach out?
Yeah, man. So good old-fashioned email is a good way to contact me. Josh@smalltowninvesting.com. And then I hang out the most on Facebook. You could, send me a message, send me a DM on Josh Chapman, my personal page, or Small Town Investing with Josh Chapman is a little business page I put together. So email or Facebook, probably the best way to get me.
Cool. Sounds good. I'll put those links in the show notes. So if you guys want to reach out to Josh, just click a little more in the description. It'll pull down that full description. In there, you can find his links. All right, Josh, that wraps it up. Thank you very much for hopping on the show.
Yeah, thanks, Gabe. I appreciate it, man.
For sure. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just give us a review on whatever you're listening to this on. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.